I've got. So now I'm recording, just me and Connor here. So for the first exam, you have a 1 hour, 50-minute time limit, and there's 43 questions. So the first one is just like an honor statement on my honor. You're not allowed to use any other materials or the websites or anything online. Closed note, closed book. You can have a blank Excel sheet ready to go or use a calculator. But you'll sign that first question, just put your name. There are 11 multiple choice and true false questions, 25 short answer fill in the blank questions, and then 6 problem questions at the end. And those are worth the most points compared to the other problems. So if you are a person, for you, Connor, or I guess anybody that's watching this later, that doesn't do well with time tests, it might be a good idea to start at the end with the problem questions and get those out of the way. So for the first one, you'll need to be able to calculate after-tax yield on investments. There's a couple questions about that. It'll just say like, this company made $500,000 in income before taxes, and they're in a 15% tax bracket. So what is their take-home amount? What is their income after taxes? Questions like that. Second, you'll need to be able to create an income statement. And that's in chapter 3, is pretty much all about income statements. If you look on page 85, there's a really good example of an income statement.
What page is that, sorry?
Page 85. So I'd say the biggest thing with the income statement is people tend to mix up some of the areas. So when you're looking at that, just pay attention to what goes where. So first are revenues, and then you'll have your expenses. After expenses, you list your operating income. If you remember from your reading and questions and stuff, operating income shows you the income made from the core activities of the business. So like a hospital, their purpose is to provide patient services, health services. So that income is everything related to those activities. After operating income, you'll list non-operating income, and that's things like investment income or contributions made to the hospital, things like that that are just kind of on the side. Like a hospital is not an investment firm. Its purpose isn't to like put money in other people's stocks or buy bonds or things like that. But they will sometimes do that if they have extra capital and they want to increase it. So you'll list those non-operating income items after revenues, expenses, and operating income. Then you'll get your non-operating income. And your net income is your total of operating income and non-operating income. So just remember those are all outlined on page 85 in the example there. Look at it real quick. One thing that I would also note, this example shows provisions for bad debts listed in the expenses. There's actually a note in the book that was added in one of the later editions. It's on page 106. Provisions for bad debts actually belongs in the revenue section now. So you'll have like a gross patient service revenue, and then you'll minus provisions for bad debts and have net patient service revenues. So that's where it should be. Brother Wolf has been pretty lenient in the past, but I will probably grade it wrong if it's in the expenses section.
Okay. So that goes in your revenue section, and you take that away from your gross profit.
From your gross patient service revenue.
Okay.
So you'll be given all of the different line items and numbers, and you'll just have to put them in order, basically, put them where they go. You'll have to calculate like total expenses, total revenues, those kinds of things to fill in the blank spaces on the income statement. But and you should use everything that is given to you as well. There's a couple things you need to be able to solve for from the income statement. You need to be able to solve the operating margin as well as the cash flow. So operating margin, if you remember, is operating income divided by your total revenues. And remember, operating income is everything made from the core activity. So it's not including investments or contributions, things like that.
Can you remind me of some of the non-operating income examples? I can't think of them right now.
Yeah, so investment income. So the hospital decides to buy stock of another company, and that company paid them dividends maybe. That's
Okay.
non-operating income. Or maybe the hospital has got, this is actually one that I want to double check on, so I'll actually skip this one, but contributions made. So somebody decides to donate $50,000 to help develop a new wing in the hospital, and that is non-operating income. That's someone just gave them that money, and it's still listed on your income statement. It's required by GAAP that it be reported.
Cool.
Okay. So operating margin, it tells you basically how much money you get to keep per dollar of revenue that you bring in. So basically, my operating revenues, let's say I bring in $500,000 and my operating income is $300,000. So I would simply take 300,000 divided by 500,000.
60 cents.
Yeah, it gives you 60 cents. So 60 cents for every dollar of revenue that you bring in is profit now to you. It's operating profit. It's for income. That's what that is telling you. Cash flows is really easy to solve. You simply take the net income, which is the bottom line on the income statement, and you add any non-cash expenses back to it. So in this class, the only non-cash expense that we ever deal with is depreciation. Another example might be like amortization, but we don't deal with that at all. So it's pretty much going to be net income plus depreciation added back, and that gives a more accurate picture of what cash came into or left the business. So those are the things you should know about the income statement. After that, there's just one more section left. You need to understand how to create a balance sheet. And there's a good example of a balance sheet on page 112 in the textbook. And again, it's a good idea to review these examples because a lot of people will mix up some of these line items. Like on the income statement, I saw a lot of people put interest as on it. This is back on the income statement. So interest is an expense. It goes in the expense section, but a lot of people listed it as a revenue or as a non-operating income, but it's not. Any interest made on investments would be listed as an investment income. So again, just kind of review and look at some of these and make sure you understand where each item belongs. Another thing to keep in mind while creating this balance sheet now, going back to the balance sheet, is what's known as the accounting identity, and that's assets equals liabilities plus equity. So your total assets should equal total liabilities plus total equity. Once you finish your balance sheet, if those two numbers aren't exactly the same, you know you've either done your math wrong somewhere, or you left out something, or you put something in the wrong spot. So it'd be a good choice to review that. From your balance sheet, you need to be able to find net working capital, which is simply current assets minus current liabilities. And then your debt ratio, which is total liabilities divided by total assets.
So can you take a second and kind of help me understand like what your debt ratio means to a hospital?
Yeah, so debt ratio is total liabilities divided by total assets. It basically tells you how or what percentage of your assets were financed by debt.
Okay. So you could have long-term assets that were financed by long-term debt. under
Yeah,
life.
or even short-term debt. It basically just tells you that for every dollar of assets, this many cents is a debt that I owe, or is financed by debt.
Okay. Or else if you didn't have like, which isn't very likely, if you didn't have very, very high liabilities, you'd have high equity. And so a lot of ownership to the whoever owns.
Right. So if you didn't have a lot of liabilities, but you had a lot of assets, you'd also have high equity. And that's really good news for the shareholders, because that means if the company ever goes out of business, there aren't a lot of debts to pay off before they're going to get their payout from the company assets.
And so you'd list that as a percentage. And if your debt ratio was very close to 100%, that's bad news.
That's bad news. The closer to 1 your debt ratio is, the more debt the company's in, and it's not very financially healthy.
Okay.
They don't have a lot of ownership. They owe a lot of money. They don't really own what they have. If that makes sense. Because liabilities, I think the book defines them as claims against the assets of an organization that are fixed by contract.
Okay.
So with so many claims against the assets, the company doesn't really own them. Like what would happen if all of their liabilities came to call and wanted payment, they wouldn't have anything left. They wouldn't have a business anymore.
These are probably dumb questions, but is it healthy to have some liabilities, like a 40% debt ratio? 50, I don't know. Is there a good number to have with your hospital, or?
That is a good question. I don't know the best answer to tell you. I'm sure it's okay to have some debt, because there are just things you can't do without raising money.
More money, yeah.
Yeah, I mean, you can, if you have like a publicly exchanged hospital, you can sell more stock to raise money. But otherwise, you've got to go to the debt markets or things like that, take out loans or issue bonds, things like that, in order to raise the capital you need for other projects and ventures and expansions and things like that.
Okay.
So I guess the best thing to say is a company without any debts is one that will never go out of business, But as far as I know, I can't think of any examples of any companies that probably don't have any debt.
Yeah, it's true. Cool.
So that's it for the problems. I know I didn't really review what exactly to expect on the multiple choice, short answer, those kinds of things. But my biggest advice is just to review your questions assignments, because those are pretty much exactly the things you need to know for the test. Most of the test questions are taken directly from those assignments. So you need to understand the differences between a for-profit and a not-for-profit. You need to understand a bit about the financial statements we've covered to this point. Things like that. You need to know, like, what is an HMO and a PPO. Not in great detail, though. You need to be able to tell me what this stands for. It's really not too bad. If you can go through your assignments, you should be really well prepared for the test. But if you have any other questions, I'd be happy to answer them.
There was another one. I gotta find it real quick.
Okay.
Oh, I think I was able to ask enough questions with the debt ratio one. Just on our chapter 4 problems is asking about, like, who has a better debt ratio. So now I understand it's better to have the debt ratio lower.
Yeah, lower debt ratio
than higher. Okay. Good for that assignment. Can you hear that music in the background?
Let me turn up my volume. I can't really hear it at all.
Okay. Maybe somebody else can hear it. Let's see.
Any other questions for me?
Not that I can think of any right now. I'll probably study over the weekend a little bit, and then on Monday I'll come again. But
Okay, yeah, that's a good idea. Like, go through your stuff, and then if you have any other questions that would be beneficial for the other students too, you did come on Monday. So otherwise, I'll just pause the recording and a half hour left. So if you want to come back or
okay.
re-record if anybody else joins, so that you can then benefit too from whatever they ask.
I might look through it a little bit, and then if I have any questions before 4 o'clock, then I'll just come right back. So
Okay, sweet.
thanks, man. Appreciate it.
You're welcome. See you, Connor.
Yeah.